Panic gripped China's stock market today, sending shares tumbling. That story kicks off the roundup. China's benchmark stock index has seen its biggest fall in 8 years. The Shanghai Composite Index fell 8.5% today, the second straight day of losses, and the worst daily drop since February of 2007. Up to now, the index had seen a 3-week rally. More than half the stocks on the index hit their maximum downward level of 10% today, and 75 stocks dropped for every one that rose. The selling comes on word the IMF has urged the Chinese government to unwind measures supporting share prices. The nation's also been reporting a string of negative economic news, including a drop in industrial profit and a slowing of manufacturing activity. And Ian Lee joins us now. So, Ian, your reaction to this news out of China today?
You know, it shows once again, Diane, the difficulties. When Russia, the Soviet Union collapsed and central planning disappeared in the Soviet Union and they went and liberalized on the political side first, many analysts said, you know, you got it backward. You should have done what the Chinese did and opened up and liberalized your economy first and then deal with the liberalization on the political side to go from an autocratic, centrally planned economy. But what this is showing is how incredibly difficult it is. There's no real textbook on how do you go from a centrally planned economy, which is a nice euphemism for communism, to which is highly centralized, decisions made at the top, to a radically decentralized economy, including the stock markets, the capital markets, which we are familiar with because we've been evolving it for over 100 years, but the Chinese are clearly finding it very, very difficult to do in practice.
There's so much fallout, of course, with anything that happens with China. It's been such a dominating influence on the world economy for so long. And I mean, we look at, commodity-based dollars like Canada's currency, like Australia and so forth. You see them falling down because of lack of demand for commodities and so on and so forth. We're just talking now about, this complete catastrophe unfolding in the market, perhaps. How worried do you think investors should be worldwide about the outcome of all of this?
We should be worried for sure. I think it's clear that China is regressing to the mean slowly, as Larry Summers has suggested that they would do. If several years ago they were growing at 10 and 12% a year, then they came down to 8, 9%. Now they're down to 7. There's a couple of Lombardi research is suggesting that the real growth in China right now is only 4% GDP. Oxford Economics agrees with that too.